Bess, if you look at this kind of movement in mortgages, what is the ultimate impact you're seeing among buying trends that are most significant that maybe most people don't see?
Yeah, I mean, I think the rates going up so much has created this sort of potential buyers are sitting out and opting to rent. And I think also potential sellers are deciding not to sell because they don't want to refinance at these higher rates. But what you're seeing is a trifecta. You're seeing rates that are up. You're seeing inventory constrained in most of the country, not New York City, but a lot of parts of the country. And you're also seeing prices are still elevated. So that trifecta is creating a sort of sluggish housing market.
Let's talk about New York City for a second, because just before you got here, New York City had been announcing a new plan to roll out as many as 20,000 new housing units, and really rezoning Midtown from office buildings to a more residential place. How might this impact the market in the city?
I mean, it would be a great thing. I know the mayor's office has submitted this plan to do this whole rezoning so that we can do that. And we have a migrant crisis, as we know, so we could definitely use more housing in the city. Would be a great thing to do.
How are you thinking about pricing, not just in New York City, but over in the Hamptons? Because you look at this trend of people willing to pay pretty extraordinary prices when it comes to the luxury market.
That's right. That's discretionary. So discretionary is very different than the everyday buyer because they have a lot of money at their fingertips. They can spend a lot. They don't care so much about rates because a lot of times they are cash. Cash is king. But rates have doubled, so a lot of people are holding back. But in the luxury market, in the Hamptons, Palm Beach, and Florida, for example, there's no inventory. Prices are high, and there's not a lot to buy there. And people are, you know, if they have a lot of money, they're willing to pay a little bit more. But the everyday buyer is sitting it out for the most part.
Is it that the scarcity value here is making more people jump into the market, knowing that they're not going to get a place if they don't jump now anyways?
Well, I think people are trying, right now it's mixed messages, right? So we heard recession, 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 and now they're saying, the Fed is saying, okay, or the economists are saying there won't be a recession, right? And inflation has come down, which is good, but I think it's a flawed assumption to think that because inflation has come down, rates are going to come down. I think rates will stay at where they are, and they probably might tick up a little bit. So I think we have to get used to this new 6% and 7% for the 30-year.